Hello dear traders, it's Petko Alexandro from EA Forex Academy, and this morning we have one trade opened. As you can see, it was opened at 4 o'clock and now it's just a couple of hours later on. I saw the opening. Actually, I was awake early in the morning, but I didn't have the time to record the video, so just now I will record the video. I will show exactly how I calculated what I need to do after the trade is open. I was just keeping an eye on it in order to make sure that it's not going down and I don't miss to place the sell stop. So what you need to do after the trade is open, guys, make sure to do it as soon as possible, because of course there is a huge chance that the price will just go down and you need to be protected with the never losing formula. If it goes up, of course, it's in our favor. When you place take profit, you can see it's exactly at $200. What you can do, of course, is you can modify the order in order to have exact take profit of 210 if you wish to follow strictly the never losing formula where I'm putting with 210, because it's really nice if you wish to have $10 extra, guys. If the trade goes overnight, better to have these $10 in order to have pure profit of $200 at the end. I mean, this will not always happen, but this is what we are aiming for. So let me just put it here another $10, so it will be 53. Let me do it one more time. So I need to put 6353, okay, without the 4. So this way I will modify it and the take profit will be another $10 high, as you can see, exactly at 210. The second option is you can use this exit condition from the envelopes of the expert advisor, but keep in mind that it's very possible that the price will go down and it will actually go below the envelopes, below the lower band. It will open a bar there and then it will open a new bar above the band. So what will happen? You will be out of the trade, but this could happen below your entry point. Okay, so this way you will have a loss, a small loss, but it's a loss. And because I really don't like, guys, to have this loss, what I do after the trade is open, I remove the expert. Okay, expert advisor, remove. So now I'm not using this envelope. So you can see here when the price is going nearly, let me zoom it a little bit. So the entry was here, the price went close. So imagine this bar went lower, a little bit below the lower band, and it opened here, and the next one opens right here. This will be an exit condition, but it will be on loss. And of course, this is really rare. Most of the times you will see the exit condition on the profit, but again, I say it's your choice. So this is basically the third option where you can leave the expert advisor running while you either hit the take profit, you either have the exit condition from the envelopes, or you either hit the sell stop from $70 lower and you enter into the never losing formula. This way, for sure, at this moment when you hit the sell stop, you need to remove the expert advisor. Okay, because if you enter into the sell stop and then the expert advisor exits from the envelopes, you will be messed up. So these are the three options, guys. Keep it in mind. Number one, you use the expert advisor fully automatically. It's up to you. If you find it profitable, you're welcome to do it. It's very well back tested. It's robust strategy, should be working great. Depends on your broker, of course. The other thing is you use the expert advisor just to open the position, then you remove it just like I did, and you manage the trade with the never losing formula if it's needed. And the third option is that you actually keep the expert advisor running, so you will be using the envelopes as exit condition until either you're out from the envelopes, either you hit the take profit, or you either hit the sell stop, which I will place right now. But again, I say there is a slight possibility that the exit will be on a little loss. So I really hope it's clear. Let me calculate now where I need to place the sell stop. So let me just bring it on over here. So our entry price is 6143.98. and $70 lower would be $6,073.98. So this is how I'm calculating, simply $70 lower, and my take profit there will be another $210 lower. So $210 lower, this would make it 5,863.98. So I'm writing it right now at the same moment on a piece of paper, and it's easier for me to calculate it. Okay, so I will close it now because I have it on the paper, and I will go to trading, new order. This is from where we are placing the order. Type is market execution or pending order. Market execution is if you want to execute the order on the moment, and pending order you can choose now 4 different types: the buy limit, sell limit, buy stop, and sell stop. So basically in this strategy we're using the buy stop and the sell stop, and right now I will use the sell stop. So the order will be executed when the price reaches this level of $6,073.98, and here of course you need to change it to 1.4. So 1.4, but make sure you write it without the comma, but exactly this way. So the stop loss, guys, is the same as the take profit from our first trade, which is 635398. Okay, and our take profit, we said it's 586398, and we need to enter the price as well. It's 607398. When I hit place, you will see the order sell stop at 1.4, and here is the take profit. You see exactly 294, and the stop loss for the sell order matches exactly with the take profit, because this is exactly what we need to happen. If I enter into the never losing formula, so I hit the sell stop, then I will place another buy stop at the same price of 6,143. And then if the price hits this take profit, the sell order that was executed, that we just placed now, should close at the same moment, right? Because if it doesn't and the price continues higher, obviously we will be on a loss. So make sure you do that. And the other thing you need to do, you need to modify as well the stop loss for the long position, for the buy, which actually needs to match with the take profit of the second position. So it's 5863.95. And if I modify it, you will see now that the stop loss and the take profit match exactly. You should not see two different lines here, meaning that if now the price reverses and goes down to this level, I will be entering into the short trade, but when it hits this level, okay, I will be out with negative of 280 from the first trade and positive 294 from the second trade. This is how we are going out with zero losses, guys. Very important. Make sure you learn the formula very well, and of course I will give you a couple of examples during this course, and I hope I will record as many as possible so you will know it more in details. Okay guys, thank you very much for watching. I hope it's clear here, and I will continue the video once this level is hit or this level is hit here and my sell stop is hit. So at this moment I will place my buy stop. Okay, thank you very much for watching, guys, and I will continue straight away when there is some action there. Cheers guys, bye.